beginning of the week that if these numbers come in way too hot, we're in trouble. Even though I don't want that to be the case. And so we are. We can give back a lot of the gains that we've just had because it means that obviously when they come back, if it stays hot, they will do another 3 quarters. That's not what we thought. Remember, we kind of bought this market and they did it at 50. This number is extraordinary. We're a growth country. The rest of the world is not. Now, I agree with you, Andrew, that shouldn't we just take our hats off that we are the growth country of the world right now? We need more people. We don't have them. But obviously, the stock market likes bad news, not good news.
Well, but that's the question. Is there a way to land the plane softly at this point? And when you think about inflation, I mean, you hear Elon Musk on one side saying, you know what, we're actually the supply piece of this is actually getting better, right? And then on the other side, we're now hearing about more jobs.
As much as I thought that the Twitter ride post was really good against him, I thought he was spot on. I think he's just he's just so smart, and what he said is true. The commodities roll over, and then the people, we had to slow down. I think that there's more layoffs in the last few weeks than I've seen in a long time. I had XPO Logistics on last night, which is one of the largest trucking companies, and they had 44,000 applicants for jobs. It's the highest they've had in a long time. So the truckers are coming back. They're coming out of the woodwork. So I don't know. Andrew, I think there's something to be said for a country that's very strong, and that number shows we're very strong.
We got to jump, but just 30 seconds. Warner Brothers Discovery.
I like companies that make money, not lose company. I like companies whose EBITDA is higher and they don't have this kind of coverage. Charm per share. It only gets you so far, Andrew. Invest per share. Charm invest per share.
This is like the old Warren Buffett maxim, which is praised by name, criticized by category. Jim Cramer, holding your tongue.
You're good.
We're going to see you in just a couple of minutes.
Enjoy the show the whole morning. Enjoy the whole
turns just after this.
Good morning. We have some exciting stuff happening today. Let's take a look. So the Labor Department is releasing their non-farm payrolls data for July, which just took place. The Federal Reserve is releasing consumer credit data for June at 3 p.m. Eastern. We've got earnings for TELUS, Liberty Village, Western Digital, Goodyear, DraftKings. We've got some wavering in U.S. stock futures due to some of the just recent notes. Other items to think about today: U.S. stocks have closed as of yesterday due to mixed heavy earnings reports. So we saw yesterday's close just again saw a bit of a downturn. Shares of Coinbase surged though. Lucid fell. We saw some significant earnings from Warner Brothers. It was an interesting day. A sharp decline in longer-term bond yields. We saw Elon Musk signal a major expansion of Tesla factories. We saw Goldman Sachs say that they're investing business practices on their own credit card unit. And we also had, obviously, the House Speaker, Nancy Pelosi. We're going to go back here. Let's go back.
with all of these rate hikes coming, the issue is going to be around demand destruction and what that means for earnings and the consumer. Just taking a look at earnings, and margins are an issue. If the US is growing stronger than the rest of the world, that's going to lead to a stronger dollar, which is another headwind for earnings. You're seeing that today with companies like Monster, where they're growing revenues very strongly, but margins are being hit and therefore they're missing earnings. If this could continue, and we've seen earnings consensus numbers actually increase year to date. So that's one risk. Also, the consumer, another risk is rates continue to go up. Just because we have strong employment numbers, that's likely not enough just to hold up an economy if the other two pieces, consumer and earnings, start to crack.
So therefore, what do you do in this market if you're playing the equity game? I think
it's challenging. Yeah, and I think it's challenging. We've had a trading range on equities for about 3,600 to 4,200 on the S&P 500. I think the market got overly optimistic. They thought the Fed pivoted last week. We don't think that they did. The Fed, I think, continues to raise interest rates, and you've got markets now trading at above average valuations, and that's a risk more to the downside than the upside. There's a lot of uncertainty going forward. I think we don't get the all clear until you see that persistent decrease in inflation and hope that the economy holds up. You can get to that, but you're not there right now. Odds are actually greater for some form of recession going forward because of all these upcoming rate hikes.
And you think there's no way that the Fed says, you know what, maybe Elon Musk is right on one end, Jobs on the other end, it's okay?
Fed's been pretty clear that their goal is to battle inflation, and the inflation numbers so far are looking, fairly strong. We'll see CPI, and where does that come in? Maybe we'll get some good news there, but inflation remains high. Fed is going to continue to raise rates, hope that the economy remains strong. But they've even said if we end up in a recession because of this, the goal here is to battle inflation, and that we still see for inflation as an issue, particularly wage inflation, and those labor force participation numbers are not picking up, and we would want to see that in order to ease supply and help lower the wage inflation numbers.
Okay, Sarah, want to thank you for joining us this morning. Appreciate it very, very much. Want to get over to our good friend Joe, who's with us right now. Hey, Joe, take a look at the final check on markets for me, if you could.
I'll do that for you. No problem. 210 on the Dow. We'll see whether that holds up throughout the entire session. I am hearing some things from some smart people, Andrew, about the point that both of our esteemed economists were talking about, and that is that that productivity is at risk here. If you're adding that many jobs, and that can hurt corporate profits, and maybe there's a reason for the stock market, for that rest, the end to the what might be just a near-term rally, and maybe there are reasons ingrained in this weird economy that mean that the market's not going to like this because the Fed's got to go much further. Who knows? But we got through this. We got through this, Joe, and I want to be happy about the jobs number.
What a big week of news. What a big week of news.
Big week.
Fun, sir.
Big week of news. Oh, no. What was your favorite story? The Visa one? Make sure you join us.
There's so many. I can't even rank them.
I like Schumer working through cinema. I like Schumer working through cinema to get the deal, to get the carried interest done. Make sure you join us next week. Squawk on the Street is next.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer live at Post 9 of the New York Stock Exchange. David Faber has the morning off. July jobs is a barn burner. 528,000, more than double the estimate, best since February. And the 2-year rockets back to 316. We'll break it down and talk about where it leaves the Fed and CPI next week. Our roadmap begins with July job surprise. Hiring soars. Stocks down a bit on the news. Warner Brothers Discovery sliding in the pre-market following its first quarterly results post-merger. And we'll talk with AMC CEO Adam Aron on the company's earnings and his plans to issue more than 500 million shares of preferred under the symbol 8. But we got to begin with the jobs number, Jim. As we said, earnings, 5/10 is up from a prior 4/10, but it leaves the year-on-year unchanged at 5.2.
But, I mean, this is as hot as can be. And my theory has been that the commodities roll over and then job growth rolls over. So I don't think is it peak? Whatever it is, you can get a job in this country in that month like I've never seen in my life. And I want to celebrate that while I also recognize that the Fed's got a job to do. Our country is the great growth country on earth. The Chinese would kill for this economy. The Europeans, it's never going to happen. We do have to probably rein it in because there is slight wage inflation. Look, I'm not saying that there isn't wage inflation, but we do have tremendous commodity deflation, and the inflationistas will not talk about the fact that oil just went from 126 to 88, probably goes to 85. That every single, anything goes in the house is down. When we see the companies themselves, most of the earnings aren't that good. So enjoy, but it's still going to go Jay's way because he's got one more. There's no need, I think, to do an emergency, but he maybe feels this is that bad. But this is, look. Congratulations, America. Boy, do we ever have a lot of business.
Enjoy what? Are you saying
enjoy
this is the Goldilocks scenario?
Well, we have commodities down. We've got wages okay. So yeah, I mean, this is a period where you'll be able to buy things at good prices because there's gluts everywhere in the system. But I also know that we're beginning to see layoffs in technology. We're seeing layoffs. I mean, look, iRobot gets bought by Amazon. The first thing they do is they announce layoffs. That covered them. I know that I had one of the largest trucking companies on earth last night, Brad Jacobs, XPO, and they're getting many more resumes than they can hire. Remember, trucking was where we had the toughest recruiting. Now it's like they're just inundated. So I don't know. I'm going to say peak this. Just like I said, peak commodity, I'm going peak job.
Well, that's exactly what Elon Musk tweeted earlier in the week. And
you
then,
never
of course,
go wrong when you quote Elon. Well, then I question it, but
you said it was an important tweet at the time, and then of course he expanded on it in some comments. Do we have that sound now? You want to go to it? Elon Musk on inflation. Oh, don't have it, but Jim, the line is most of our commodities, the things that go into a Tesla, not all, but more than half the prices are trending down. Now, this could change, but the trend is down, which suggests that we are past peak.
I'm all in Musk. I think that he sees it better than anyone. Look, he's a huge manufacturer, one of the greatest manufacturers, maybe the greatest manufacturer of our lifetime. And but he also is very close to customers because of their unusual direct sell. And I think he's just spot on. That's what's going to happen. That's going to come true. And boy, does he ever have a handle on the commodities. So, yeah, I am all in on what he said. I think he's going to be proven exactly right. He is that. He's smarter than he may be smarter than almost anybody except for Jensen Huang, NVIDIA.
Right. How would you characterize how the market's absorbing then the jobs number?
Well, I said this week that if we had a red hot number, and when I did my game plan on Monday, I said we're going to repeal a pretty decent amount of the July rally. And I think that there's so many people who are fearful that they will take profits. And it could be thin trading too.
Yeah. On top of that, the B of A desk this morning suggested that the squeeze we've seen for consumer names, especially, the biggest squeeze in a couple of years, signs that it is starting to ease off. You saw it in the latter part of yesterday's action.
Look, obviously I don't want it, but I do think that we've had a dramatic decline in a lot of commodities, but that was predicated upon the economy kind of cooling off. Watch oil. Oil might be the tell because oil has been my reason to be optimistic about the rest of the market. Remember, when oil goes down, almost everything is going up. If oil comes back and oil's still nicely down, then I think we're going to see a real repeal. But right now, the commodities are not. The commodities are not acting the way I thought they would. I mean, I thought that the commodities would spike on this. We've got copper up slightly, we have lumber up slightly, but we have oil, gasoline down badly. We have natural gas, but they're not reacting the way I thought they would. I thought that they would spike. So I'm still medium-term bullish. We have to deal with this because people just know red-hot employment sell. They don't really think red-hot employment, let's sell something. It's a red-hot employment, let's go to the S&P and bang out the futures. Because this is big money we're talking about. The money that we're talking about, individual companies are too small for them. But I do think that this was not the number I wanted to see. I know that. Right. As someone who's bullish.
But it doesn't sound like it's enough to make you think, all right, maybe we switch back to banks and energy.
No.
Going into next week.
No, I just think that what's going to happen is there's going to be a pall has been cast over everything. because now just people say, will they come? Will they in August? Will they signal? What did they know? All of these hawks. What did they? And if they're going to focus just on employment and not at all think about what Musk talked about when it comes to commodities, I think they're going to make a mistake. Because I think that they should. We didn't have that. He's going for a soft, shallow recession. That's what I'm hoping for. That is
You're talking about Musk.
Yeah, that's exactly what I'm hoping.
Musk tweeted the idea that we're in for maybe 18 months of a mild recession.
I think he's right. I think they should listen to him. If I were a Fed governor or president, I would say, let me go over what he said. I wouldn't even give him a call. I don't know if you take a call, but look, does he see the panoply of the economy better than anyone else in the world? Yes. Remember, he's got Berlin, he's got China, he's got parts of America, he's got direct sale data that he gets every day. He knows what he can build and what he can't build. His call, I think, is perfect.
We're going to talk a lot more about their meeting, the split.
The Twitter post about him does not make him out to be a gentleman and a scholar. The one that came out last night was basically saying that he's a pack of lies.
Yes, and he would argue backward that their own metrics are deceiving as well.
This one was just, I thought it was killer. I thought it was dispositive, and I really felt that, all right, Elon Musk, you're also going on Twitter. And how will that be in terms of figuring out the economy?
A lot to get to with Tesla in a bit. Let's move to some earnings this morning as well. Got Expedia.
Oh, no, today
Warner
was
Brothers Discovery, AMC, all with results. And speaking of AMC, as we said, we'll talk to Adam Aaron later on this hour. Jim, they're going to open down about 9, last I saw.
Yeah. There's. Well, do you want to start from the top of these?
Well, AMC, I guess, while we're at it.
Because AMC, you have to understand, they did this thing. We're going to talk about it. It's ledger demand to some degree. They've created a second class of stock. And I think that the most salient thing about it is that it's called APE because it's a preferred AMC, a preferred equity. And what I think is that as much as I love Adam, the story was that the quarter was good. I think that the preferred is chimerical. It doesn't make sense that unless you want to make it so that the rabid people who really love him even more. And there's an NFT basically for like a shirt. Anybody else would be laughing at it, but you can't with him because he made the numbers. He made the darn numbers. So he gets to come on and we can treat him seriously, even as I'm looking at the Eugene O'Neill play that we had to read that was so horrible.
What are you talking about?
Harry Ape. Yeah, I thought it was horrible. Eugene O'Neill.
Yeah.
It was an introduction to plays that they destroy any feeling that you might like a play when you're in high school. But this is about the apes. They love him. The apes are a group of people who have two things in mind. I don't have too much hubris, but they love him and they hate me. And that's fine because you see, they exist in a zoo and they can't get out. I, on the other hand, have total freedom of action.
You have free reign. You are free range. Range.
Now
Kramer.
they would say I'm a free range chicken, and they're going to find me. I would just point out that they're incredibly nice. Just don't go into their area. Not caged. See, I didn't notice that because that's not right.
Yes. How about WBD?
Okay. Let's just.
Some of the targets on global subs by 2025 are in the 130 million range. Their run rate, though, on Q2 DTC is much below what Netflix is doing, what Disney's doing at this point.
Well, there's a thing called EBITDA. I know it's hard for our viewers, but I will tell you, they don't have it. This was a quarter that actually was one of the worst quarters. Well, no, it said we have highs on today. I mean, this is. How about this? One of the worst legal quarters I've ever seen. Look, this man. Let's just start from the beginning. When you go to a restaurant, let's say you go to Porterhouse, all right, which is a beautiful restaurant. And Tim's the maitre d', and he's great. And he always says, well, don't forget, Zaslav's over there. You probably want to say hi. And you know what you want to do? You want to say hi. Why? Because he's a great person. All right? So let's start with there. He's a great person. But the numbers were so off that it made me feel that he got had by ATT. Now, he's never going to say that because, again, he's too nice. And by the way, David, what's with the vest, no matter how hot it is?
It is a signature look.
Do you trust a man who wears a vest?
Signature look as well.
Do you trust a man who wears a vest in 100-degree temperature? No. But I do think that in the end, balance sheets matter, and that's something he lacks, is a good balance sheet. If I were him, I would raise money and raise money quickly because he's selling it. It's 5 times EBITDA, which is historically a bad level.
Yep.
But again, I come back to if he were to do it and offering, people would love it because everyone likes him. Everyone's pulling for Zaz. Is it going Zaz?
Yes.
Creamy.
A former colleague of ours here.
Yeah. And I do like him very, very much. But this is a bad number.
Yeah. So you're back to worrying about balance sheet issues, as some of the street was early in the deal.
I mean, he's got to make some moves, and they're not they're not offense, they're defense. And I wanted a good number, I expected a bad number, but I did not expect a number this bad. This was bad.
Yeah. Good numbers. If you're looking for him today, you could look at DraftKings. Better than expected.
Jason Robbins, congratulations, going into the football season, and he's doing incredibly well. By the way, when you speak to Jason, okay, we're dealing with a plethora of nice people. But Jason, I was pulling for him because he came into Arizona hot. But this obviously is the quarter coming into the football season that it's exactly what you want. So I think there'll be people who buy DraftKings stock off of this, knowing that that football is so much fun to bet on with him.
All right. Well, we had some last night, if you count that.
Yeah, I would.
Yeah,
I would.
They did talk about very little sign of macro pressure, and I don't know if you saw the Post story yesterday from saying that Vegas is just on fire.
Yeah. Oh no. I mean, this is the disposable income issue, and I know when I speak to Jason, Jason will look at where I'm on. Let's say I'm on a DraftKings board for $5, and you say, "Oh, you're doing pretty well." I mean, Jason, there are many Jasons, and we love every one of them. And I wanted this number to be good, and it was much better than good.
Yeah, revenue ahead, narrower than expected EBITDA loss. They raised the guide.
It's going to be the winner. Now there are a lot of people, very sophisticated people, who told me that it would never make it. That he spent too much money to get individuals. Now he's proving them wrong. This was a great quarter, and I would buy the stock.
Interesting. We'll talk more about that.
Just a sec. I think it's him.
And a bunch of other numbers.
No, it's another Robbins. Ooh, okay.
Including Twilio and Expedia. We'll talk some more Tesla, as we said, and that shareholder meeting yesterday. Musk talking about the economy, inflation, his battle with Twitter, and a lot more.
I'm telling you, I'm all in Musk. I'm all in Musk when it comes to the economy.
There's a look at futures. We obviously took that leg lower on the jobs number. If you missed it for July, 528,000, well above estimate.
Is Musk the only person who, when he was younger, looks a lot worse than when he was older?
We'll be back in a minute.
Okay, thank you.
All right. So once again, we've got earnings today from TELUS, Liberty Media, Western Digital, Goodyear Tire, DraftKings. DraftKings came out pretty strong. Recap again. We saw House Speaker Nancy Pelosi stating that U.S. won't allow China to isolate Taiwan. And of course, we've seen Mr. Musk state that there is major expansion on Tesla factories. So we'll be exciting to see kind of what happens there. Just a recap again for the week. Yesterday, we saw U.S. stocks close amid a heavy day of earnings reports. We saw Coinbase surge 10% due to that big deal with BlackRock. We saw Lucid fall after it cut its forecast on car production. Alibaba's New York stock listing shares rose by 1.8%, despite falling post-revenue growth. Warner Brothers Discovery, which reported its first quarter earnings, swung to a $3.42 billion loss in second quarter. That's going to be insane. We'll have to watch and kind of see what's taking place there. On the economic front, we had the Bank of England raise its key interest rate by 0.5% Thursday. And in terms of, again, the U.S., the number of people applying for unemployment benefits did rise to 260,000 at the end of July, up from 6,000 from the previous week. So with the jobs data, again, we did see jobs rise for about 560,000 net new jobs for July. I think the Labor Department was reporting potentially 258,000. So not a bad not a bad way to end the week in the United States. Again, this issue with House Speaker Nancy Pelosi does have an effect on the markets because, again, war is something that is a variable that we don't really understand how it's going to affect the economy over the next 6 months. The war in the Ukraine continues. This new potential outbreak of a skirmish with China. The U.S. is required to intervene. Let's get back to the live feed here.
Possibility of buybacks.
I think we want to make sure we have plenty of capital and that future cash flow is looking very solid and the world is relatively stable. And then I think share buyback is on the table.
All right, that would be a new chapter for Tesla, Jim.
This is one of those things where I've seen it happen before. I've seen it where you get this marginal sale where everything else is just pure gravy. And you want to reward your shareholders and with you. By the way, Jim Farley, don't forget, he's doing it through dividends. A buyback is obviously less permanent. It gives you can be once you raise dividend, you have to cut it. It's terrible, but this just shows you his model and what he can accomplish. I believe. I think that when you have a business where you have no need to advertise because your product is so great and the ad budget is so huge at the other guys, you'll crush it.
Well, not to mention the friction of the dealer network as well, right?
Look, I just think that the dealers are. Look, I like my dealers. Okay, so understand, I know what this is. I have a dealer.
They provide a service.
Yeah, and I have tremendous appreciation for what they do for me. But I just feel that he just has a great model, and it should spew cash. So when he does, I mean, I think he may not be able to build as much. I mean, it depends. Like, let's say there's more EV. Let's say that there's another thing he wants to do, like big truck. He doesn't have to do the buyback. But right now, as it's set up, if he's selling everything he makes and that he starts taking on the flatbed Ford, if you're going to turn around and take a look at him.
Yeah. Speaking of shareholder returns, not to turn the conversation too much away from Tesla, but we were just talking about Meta's offer this week, a bond market debut, and the timing of Apple's offer, Jim.
No, there's just nothing like it. Luca Maestri, the CFO of Apple, he timed that thing so perfectly. I actually have never seen that good timing.
Where it's down to literally the day.
No, the day. He's a remarkable man. And he's sometimes I just want to tell people at home what people are like that I've seen. He's maybe the most self-effacing person, but what did he do? He timed the bond market perfectly. And unlike everyone else, we had a question in my tremendous club meeting yesterday.
Yep.
He hedged perfectly. You know how hard it is to hedge perfectly? He hedged. He knew the dollar's going to be strong. He picked the right countries to hedge. He made the in terms of what we thought Apple would do, the 4 to 8. The reason why they weren't over the 4 to 8 billion, is because he was so brilliant. No one's like him. There's him, and then there's everybody else. And I don't mean to slight the CFOs and the council or anything, but he must come. I'm inviting him right here. Luca, come to the CFO council, and we will just worship you. Okay? You're not a golden calf. You be the real deal, partner.
We'll get Kramer's Mad Dash and count down to the opening bell on this crazy Friday morning with that jobs number, of course, and a lot of earnings to get to still. Future's still red. We're back in a moment.
Excellent stuff. What else we've got going on today? Just a new data point released actually this month, August 2nd. We saw total household debt in the U.S. surpass 16 trillion in Q2 of 2022. Mortgage, auto loan, and credit balances increased. So total non-housing balances saw the largest nominal increase since 2016. And mentioning this from ops perspective, if you are a operator running a business in the US, you're running a business in Canada, you want to be able to pay attention to indicators in the economy and, try and figure out and track, what is happening, how to predict potential further downturns, potential further reduction in consumer spending. This issue with the total household debt increasing is something that's fascinating. It increased by, again, $312 billion, which is 2%, to a total of 16.15 trillion. Balances now stand 2 trillion higher than at the end of 2019 before the COVID-19 pandemic. So this report came out by the Federal Reserve Bank of New York, and really it kind of gives us a better understanding of what is taking place with household debt. In terms of mortgage balances, those rose by $207 billion in the second quarter of 2022 and stood at a total of $11 trillion at the end of June. Credit card balances also increased by $46 billion. Although seasonal patterns typically include an increase in the second quarter, the 13% cumulative increase in credit card balances since quarter two 2021 represents the largest in basically 20 years. So we're just seeing some serious changes there. Mortgage originations declined. We'll get back here
Time for Kramer's Mad Dash as we count down to the opening bell.
First time I met Tony Xu, CEO of DoorDash, and we had lunch down the village, and I basically said, "Look, I don't know how I don't think you can do it." That was before the pandemic. Tony Xu used that pandemic to be able to expand the network to make it so he is the national delivery company, and they make a lot of money. As a matter of fact, they're more profitable than ever. Last night's number was extraordinary. He, along with Airbnb, okay, and just a handful of others, I was going to say Cloudflare, but people don't know that one, are coming out of this period on top. And I have to tell you, I think that Tony Xu is here to stay. These numbers were terrific. Oh, fantastic. Because this man is, by the way, you know, his whole background, he worked in his mom Chinese restaurant, got unbelievable education, Stanford, comes out, and just does amazing things. This is a great celebration of America. This is a celebration of America, what he's done. And, when things were bad in restaurants, including my restaurants, he cut his take so you can stay in business. Who does that?
Well, Benioff, Salesforce, and a lot of people made concessions for the
great
health of the.
These are great people. Bill McDermott, ServiceNow. Hi, Bill. But no, he's here. But Tony was and is a gentleman and a scholar, and he's just a great national treasure. I know that sounds ridiculous, but there are people in business who should have gone under, who through persistence came out on top and doing amazing, amazing things. Brian Chesky, too.
Yeah.
Brian Chesky should have gone under. They just wouldn't let it happen. And yet they're not like Belichick. They're actually like nice guys.
We'll talk more about Dash, and we got to get to Lyft on a week where we got Uber and everything else, of course.
It's good times, so it's got to end, right? My late mother-in-law, don't have that good a time. Okay.
We'll get the opening bell in 5 minutes. Stay with us.
So we got the opening bell just about to take off. Again, just before we jump to MSNBC, CNBC, I was just mentioning that, again, the total household debt has increased to 16 trillion in quarter two. Again, this is something just to pay attention to as we're moving into the end of Q3 here. And if you are a owner of a company, you're running a company, and you're trying to understand the macroeconomic effects of the current rise of inflation, the Fed hiking its rate, the Bank of Canada hiking its rate, and whether or not your customers are going to be affected, you want to look at a number of variables. You want to look at what's going on in the war in Russia and Ukraine. You want to be able to pay attention to what's taking place in the U.S. Again, these are huge macro economic factors which may not play out on the ground for a number of months, a number of quarters. Begin, the key thing here is really looking at your cash flow management, looking at your savings, and whether it be personally, whether it be from a company perspective, you want to be able to cut things that you don't need to spend money on. Again, if the total household debt surpasses 16 trillion in quarter two, up significantly, up 2%. you want to be able to review your options with your bank, look at potentially getting a line of credit, which is going to have a lower percentage of interest compared to your credit card, unless you have an A+ credit card, a revolving credit card, which is obviously a little bit dangerous there. But again, cash flow management is really key during this period of time. So pay attention to that. If you don't know much about cash flow management, just ping me in the chat. If you're watching this post live, again, cash flow management, we're going to do a webinar on that. We'll get that fired up ASAP on operating.net. And again, let's take a look here at what we're seeing in the markets today. We are going to get back to this issue with Nancy Pelosi. Again, was it warranted? Who's running the ship? Who's running the White House right now? If Nancy Pelosi is going out there and causing potential more problems. Again, Amazon acquired maker Roomba for $1.7 billion. What a move. It's an all-cash deal, which really basically, we'll see. We'll see what happens here. I don't know. I don't think this is good for the market. iRobot has been killing it for such a long period of time. This marks Amazon's 4th largest deal, behind its $13.7 billion purchase of the grocery chain
Jim
Whole
mentioned
Foods
this deal
in
with Amazon
2017.
today, buying
We'll go
iRobot
back
for
now
$61
to just
a
see
share.
what happens here before the opening
values
bell.
at about $1.7 billion, including debt. Jim, you got to look at everything Amazon buys.
I think they're putting together a suite of things that you can just say, Alexa, right? And now last night I was saying, Alexa, put on the bear. And I got 2 Alexas. I got my iPad over here, and I've got the. And so there is like, oh my God, there's music playing. I realized I had turned on the music. Now, when I say, Alexa, go mop my floor, I guess she'll mop my floor. She's a lot more helpful than Siri. Siri does not do much for me.
Right, yeah. But coming off of the One Medical thing, you think Amazon's establishing a pattern of bolt-ons here?
I think that Amazon is going to become your life. By the way, the fee for the medical is low. I mean, I'm looking at it to supplement my current Prestige, I've got one of those concierge systems. Well, it takes a $0 off it for a meeting. And I think that I think that Jassy is changing Bezos' strategy. I think what Jassy is doing is saying, wherever there's touch, I want to own. Healthcare, house. And then I think ultimately you can do it. I bet she does another club fee where you get everything.
Right. What do you make of headlines like yesterday where FTC deepening probe into Prime, that kind of thing?
Well, Lena Conant is so off the reservation. I find it almost, I don't want to say un-American because we're a good country, but her going after Mark Zuckerberg on a very little acquisition to help the, let's say, the nascent metaverse. I mean, I am not sure what her game plan is, but I know what company she hates. And by the way, can we just say that the real Justice Department, the Antitrust Department, they're not doing that stuff. They're going after real.
Let's not forget to mention the opening bell here.
I love Bill.
Commemorating the 10th anniversary of its listing. There's Bill McDermott up on the balcony.
Well, look, I think that what we've got, people have to understand there's the FTC and there's the Justice Department. The FTC seems to be possessed with FANG. It's almost like I wish I hadn't created FANG, because if you're in FANG, I mean, you got to get out of FANG to not have her go after you. The Antitrust Department is trying to find genuine collusion,
right?
And when they do, they come in with with hobnail boots. So these are two. One's a very rigorous organization. One I think is just picking on big American companies that have lowered costs for us for ages.
We got a lower open, of course, on the jobs number, 4112. Jim, there had been some work yesterday. Stiefel, for example, which had called for that relief rally to 4,200. They upped it to 4,400 because there remains a belief, as you've said, that inflation has topped.
Well, I think inflation may be tough, but I mean, today is a day, and very thin trading, by the way, where you have to say, okay, that's not this was not in this scenario. The scenario was that if they bump it twice, these giant rate hikes, that companies would be reluctant to hire. But if you look through where the hiring was, I mean, like, yeah, travel, entertainment. I mean, everything involving leisure's doing great, but healthcare's doing great. Government's hiring too many people, right. Which is apropos of the fact that the government is putting together bills to hire even more people.
This is a look at what Stiefel built last night. Basically, their point, Jim, is that June was maybe not. Technically, you can call it a bunch of things, but overall, it was capitulation of fear, right?
Right.
When we got down to those June
That's
lows.
very true. And July was a great month. I'm not giving up on this rally because I want the consumer strong and I want commodities down. I think that this has to be the peak of employment, or else there is going to be, I think, 3/4 can get back on the table, even though Powell said he didn't want to do it, he didn't think it was necessary.
Yeah.
This number is too high. I always feel badly, as most Americans do, that it's such a great thing that it's easy to get a job.
Yep.
And this is a terrific country, but at the same time, we can't have inflation make it so that your paycheck's not working.
I think everybody knows you want to root for America and employment, but you gotta be responsible about it. Fitch, by the way, says recession. What recession? The U.S. economy is creating new jobs at an annual rate of 6 million, 3 times faster than what we normally see historically in a good year.
In a good year. No, I mean, I think one of the things that we don't even bother to talk about, let's say you're in France. You see a number like this, you don't think about the inflation. You think, wow, what a growth country. If you're in China, you don't see the inflation. You say, oh, my, everybody who wants a job gets a job. I wish our country was like that. But instead, what do they do? What do they make it so that Nancy Pelosi can't visit? What are the sanctions on Nancy and her family? Wow, now it gets personal. Are you kidding me? Now it's not just Nancy Pelosi, but it's her family. I know her grandson. Is he out? Is it like what Michael Corleone says? You're out.
They did cancel some defense officials meeting, some climate negotiations, not to mention the military drills.
Oh, they don't stop. And look, and now you're starting to get their battle plan of what they're going to do and whether it's going to be squeeze, which is what I think they're going to do.
So we've got a lot going on today. We saw jobs report showcase 560K of net new jobs, which is great for the U.S. We've saw some mergers and acquisitions. We're seeing this issue with Nancy Pelosi play out, creating some more volatility. But if anything, we've seen hopefully a good end to the end of the week. We've saw some changes in terms of increases of consumer debt, specifically related to credit card debt. We've seen that number kind of stifle up, and we're looking towards the end of the week bell. So we'll be back probably in a few hours related to seeing what is going to take place at the end of the week here. If you are not recession ready, if you're a founder building a company right now, you're not recession ready, time to reach out to me and let's have a chat. Let's talk about why you're not recession ready. In this quick live broadcast, discussed cash flow management. Really important for you folks to get on board with cash flow management. What does that look like? Do you have a 180 day cycle for cash flow management? How do you get negative cash flow management? If you're an e-com provider, what are you doing there? So again, if you're not recession ready, if you have questions related to your business, you're a founder, you're running an e-com business, you're running a B2C business right now, get in touch with me. We're going to talk about this. Even companies that are raising money right now, any companies that received investment over the last little while, I've got founders coming back to me and saying, hey, you know what, we're not going to just raise for 12 months. We're going to raise for 24 months. Keeping cash in the bank is going to be really important. So with that being said, drop me a line, DM me, Jason Carvello at jason@jasoncarvello.org, or hit me up on Twitter. Let's see if we can update some of the banners here. But again, the name of the game right now is getting ready for your recession, whether it be you're in Canada or in the US. Again, at Jason Carvello HQ. Hit me up. There we go. The banner's going up there. Let me know. Again, we're getting back in the rolling key things here every morning before the opening bell. I'm doing a quick market assessment. S&P's turned lower again for this week, even with the strong jobs report here. We're going to see kind of where the week goes. So we'll be back in a few hours. Again, if you need any help, if you're an operator, if you're running a company, you're not recession ready, ping me on Twitter, Jason Carvel at HQ. If you're watching this all the way through, leave a message. Let me know what's going on in the chat, and we'll be back. Thanks so much, folks.
Say, you know what? We got way too much hard goods. Then they come out and they say, you know what? We got way too much soft goods. And then they come out and they say, you know what? We got way too many people. What else is left? I mean, it's a plane with 4 engines. Well, you know what? We got one more engine. I don't know I don't know what's happening at Walmart, but I fear that they don't either. And it's time for John Rainey, who is a darn good CFO, to assert himself, come on and explain what the hell is happening in Bentonville.
We're going to find out, and we're going to get clarity on back to school. Kohl's on
Target's
Thursday.
going to have good back to school numbers.
Yeah.
Target's going to have good. I'm telling you, the separation between Doug McMillon and Brian Cornell started this year. You're going to see Brian Cornell from Target just do great things. He took the charge all at once. Okay, should you buy Target right here? No, you can't. That's the problem. You got to wait until everybody comes in on Monday and you have all the Mike Wilsons on TV.
Yes.
I think Mike, I don't know, maybe he's away today. I mean, it's a beautiful day. You know, so but Mike will come in wherever Mike is. Whether he zooms in,
yes,
he will be sitting right there telling you are an idiot to buy. Yeah. So we at least have to go through the idiot factor. Let that happen and then buy. Don't buy ahead of the idiot factor.
Well, a lot of the calls to buy, for example, Tom Lee last night, arguing that many times stocks bottom 6 months before the last hike. And ostensibly this morning, that last hike gets pushed out a bit.
Well, look, I think Tom Lee could only be right, but can we just admit that there's got to be, let's have a little pain. But remember, it's not disastrous because of the decline in oil, which is just staggering. Remember, we were so afraid of the increase at the pump when we went from 80 to 130. Well, now we're almost back to 80, and no one comes on and says, you know what? I've been driving around a little more. I've noticed I have a little more left. That's not happening. Now, what I'm betting on with my charitable trust, and so far I've been so wrong on this, it's frightening, is that Disney can make a comeback here. Because Warner Brothers Discovery shows you that maybe it's not so easy to put together a streamer. I know that Paramount, everyone hated Paramount. It didn't matter.
Another downgrade today.
Yeah, it's hey, what the hell? That's downgrade.
All right. Thanks, folks, for tuning in. Thanks for those that are watching later on. We're going to keep producing and pushing daily morning ops news, market news. If you're a founder developing and building a company, building a product, developing a product, building a company, if you're a small business owner, we're really focused on the theme of recession ready. If you're not recession ready, you don't know what to do as this recession takes place, please DM me and Twitter at Jason Carvel HQ. There are some links in the profile. You can also send a message to me via that. Leave a comment, like, subscribe. Thanks so much, everybody. Have a good rest of your day. We'll be back in a few hours.